the path to financial freedom. Master money, saving, investing, and business. Lecture 13. Understanding risk. How to invest safely and avoid scams. Module 4. Investing like the wealthy. Investing always involves risk, but the most successful investors know how to manage that risk. It's not about avoiding risk altogether. It's about understanding it and making smart choices to protect your hard-earned money. In this section, we'll talk about how to make safe investments, avoid common pitfalls, and steer clear of scams that can cost you everything. Let's dive in. Risk is an inherent part of investing. Whether you're putting money into stocks, real estate, or even a small business, there's always a chance things won't go as planned. However, what separates successful investors from the rest is their ability to manage and mitigate risk. Many people lose money simply because they don't understand the risks involved. They take on too much risk or fail to prepare for market fluctuations. To protect yourself, it's important to find a balance between risk and reward. The goal is to make informed decisions that give you the best chance of success. Now, let's talk about smart ways to invest safely. First, one of the most important principles is diversification. Don't put all your eggs in one basket. Spread your investments across different asset types, industries, or even countries. This way, if one investment doesn't perform well, you won't lose everything. Next, research is key. Before you invest, make sure you understand exactly what you're getting into. This could be as simple as reading company reports, understanding the market trends, or knowing how the investment works. Always educate yourself. When starting out, remember to invest only what you can afford to lose. There's no need to take big risks right away, especially when you're new. Start small and gradually increase your investments as you become more confident and experienced. Lastly, think long-term. Emotional decision-making can be your worst enemy in the world of investing. Don't make decisions based on short-term market fluctuations. Stay focused on your long-term financial goals, and remember, time in the market often beats timing the market. Did you know? Over 80% of investors lose money due to poor risk management and emotional decision-making. Investment scams cost people billions every year. Ponzi schemes alone stole over $3.25 billion in 2022. Bernie Madoff ran the biggest Ponzi scheme in history, stealing $65 billion from investors. Even celebrities and billionaires fell for his scam because of the promise of consistent high returns. The lesson? If an investment seems too good to be true, it probably is. Mark Cuban once lost $1 million in a penny stock scam. He later said, "Do your own research and never invest based on hype." Today, he focuses on businesses with solid fundamentals and real growth potential. No one is immune to risk. Even the smartest investors have lost money. The key is learning from mistakes, diversifying, and avoiding that sounds too good to be true. While investing offers many opportunities, it also attracts scammers who prey on inexperienced investors. So, how can you tell if an opportunity is a scam? First, be wary of guarantees of high returns with no risk. There's no such thing as a risk-free investment that offers high returns. If someone promises you a high return with no risk, it's a red flag. Another warning sign is pressure to invest quickly. Scammers often create a sense of urgency to get you to make fast decisions without fully understanding the investment. Always take your time and make sure you're comfortable with the opportunity before you act. Additionally, watch out for lack of transparency. If the business model is unclear or they're hesitant to provide detailed information about how they make money, that's a huge warning sign. Trustworthy companies are always willing to answer questions. Finally, unregistered or unknown companies are also a major red flag. Always check if the company is registered with the appropriate financial authorities. If you can't find any information on the company, it's best to walk away. And finally, the golden rule of safe investing. If it sounds too good to be true, it probably is. If an investment opportunity promises you returns that seem too high for the amount of risk involved, chances are it's not legitimate. Always remember to do your own research. Don't just take someone's word for it, even if they claim to be an expert. A wise investor always makes informed decisions based on facts, not hype. Focus on proven, steady strategies over get-rich-quick schemes. Successful investing is not about making fast money, it's about making smart, consistent choices that lead to long-term wealth. Conclusion: by following these guidelines, you can make informed decisions, avoid scams, and build your wealth safely. Remember, investing is a journey, not a race. Take your time, be diligent, and focus on strategies that will keep your money safe while helping it grow. Stay smart, and you'll be on your way to financial success.
If you enjoyed this video, show some support by hitting like, tapping the bell, and subscribing, so you never miss our latest content on financial freedom and wealth growth. Let's grow together. Your one click makes a big impact and helps us create even more for you.